Joe.
How are you? What are we doing here, and how does it differ from what the Senate's doing, and how are we going to finally get these things together and do something that'll work?
Joe, we've got a lot of things coming together, and we should be very optimistic about it. There's some philosophical differences between Jeb and myself and what the committee will do. But quite frankly, this is going to be the most significant reform of the regulatory structure of the United States since the 1930s and the Great Depression. And one of the big things Larry mentioned earlier, in this country we have, if we really believe in the markets, and we should, the markets have to be the eventual clearinghouse for companies. So we cannot allow companies to put the society in such jeopardy that we can no longer allow them to fail. They can't become too big to fail. And what this legislation does is provide the framework and the mechanism so that we can step in and prevent preliminarily and before there is systemic risk occurring, to stop these organizations from getting so large so that they will be allowed to fail and the natural market forces can take their effect.
Congressman Hensarling, in principle, that sounds pretty good. Do you think Congress is in a position to write a bill that can do that?
Well, absolutely not. And listen, I have the highest regard for Paul, but we do have a difference of philosophy. In fact, I would disagree. This is not significant legislation. This is radical legislation. I mean, number one, it institutionalizes bailout. It creates a permanent bailout fund, which ultimately will beget more Fannies and Freddies. It will create more systemic risk because it will hurt and harm market discipline going forward. Second of all, it creates a whole new unelected czar that can essentially ban and ration consumer credit. By many studies, interest will go up 140 basis points. We will have 4 to 5% fewer jobs created in America because credit will become less available and more expensive as the czar can make decisions about credit products and frankly ban them for subjective purposes of either being quote-unquote unfair, quote-unquote abusive. It allows large companies to be broken up, notwithstanding the fact that they may be perfectly safe and sound. I mean, under this legislation, American Airlines or Dell Computer could wake up having a government bureaucrat knocking on their door and saying, you know what, we think you have something to do with systemic risk, you're too successful, we're going to break you up. It is a radical regime that frankly is going to hurt jobs at a time where we're having the worst unemployment in a generation.
Go ahead, Larry.
I'd just like to ask Paul a question. It looked like yesterday that the Consumer Finance Protection Agency came under a little bit of an assault, and some of that assault was including Democrats. Is that going to survive, do you think, or not?
I think it's going to survive. Look, that is experimental, and it only came about because, and I'm a believer, I think as you would be, Larry, that safety and soundness is the most important tool that we have of the regulator, and that's of primary importance. But we've had now an example of several years, maybe a decade, of the consumer being totally ignored and totally unprotected by very large institutions. And the best example of that I can give is there isn't anybody in America that could justify what credit card companies are doing to their lenders, to their participants. It's tragic, and we have to have the ability to come back and resolve that problem. And the only way that we see, we've tried it in every other way, we've sent messages in every other way, now we're going to have to go to a regulator that can implement consumer protection at that level.
So what happens next, Congressman, to get the two bills together? When do you actually expect this to be on the president's desk?
Well, I think we're going to get our bill, of course, through today. And the Senate is working on a bill. They probably should be able to get it out either by, I would say no later than St. Patrick's Day, but maybe even around the State of the Union time. And then we'll go to quick conference and then put the bills together and then probably have them at the president's desk before Easter.
So they're not so different that that's going to take a while. So who's going to give in? Senator Dodd, it's going to look more like your bill?
Well, I don't know. I would have to be honest and say the House bill is probably a firmer bill and is taking many more actions to try and prevent what happened last year from happening again. And we're not trying to stop. Don't want any more bailouts, but we don't want any more bailouts because we don't want any more financial crises to occur. And this is a response to stopping financial crises in the future. We can't stop them forever or all things, but we can do what happened from 1930s and now, have a very long dry period of 75 years before we face another crisis.
Okay. Thank you.